How should I read the numbers? Give me the takeaway.
Well, complicated report. I think the situation here is we underperformed, we disappointed a bit, but I think a lot of it had to do with timing. The timing from the standpoint of manufacturing inventory has sagged more than I would have thought, and especially timing from the demand side. I think the demand side really was stronger, except for new export orders. Our backlog is still 85% of the comments are growing or the same level of backlog. So I think the real story, Guy, this month is around employment. And the fact that because we couldn't really hire enough people on the factory floor due to a lot of turnover, primarily because of quits, we weren't able to see that production number come up. And I do think that the month of May we'll see inventory come back. I think that you're going to see that new order number come back. I'm more concerned about employment and production.
Dig into us a little bit, into that employment number with us a little bit, if you don't mind, Tim. I think it's really key that you highlight this is about not being able to attract enough laborers as opposed to cutting jobs available on the market. Talk to us about the comments and some of the details that you're getting in your survey with respect to that.
So we have an overwhelming amount of people who are hiring versus trying to manage their headcount through attrition. No comments really around firing. And in the month of April, we actually saw 38% of the employment comments saying that they were having difficulty in hiring versus 31% back in March. So it kind of is going the wrong way. And if you dig into the detail, it's really around the turnover level, and that's really people quitting for other jobs.
Walk me through the prices paid number.
Well, we were coming down until the Russia-Ukraine conflict, and then we started to turn around, primarily driven by energy numbers. I mean, that's really what's happening, is that the price of a barrel of crude is worldwide very high. It's hurting our natural gas prices here in the U.S. as we export more gas into Europe, and crude oil gets into everything: plastic, steel, transportation. So most of our panelists saw an immediate impact on transportation, and people didn't wait this time to actually see it. They began to pass along immediately. That's what you learn when you finally, in 2021, when we finally passed along increases. We probably waited a little bit too long. The second time around, nobody's going to wait.
Just in terms of how manufacturers are sourcing product, though, are they getting better at it? As you say, this is something that caught a lot of people on the hop. Maybe they got the timing wrong when they passed prices on, if I can spit those words out. But are they getting better now? Are they getting more creative in terms of being more flexible in terms of what they put into the business and the prices they're paying for the stuff they're putting into the business as well?
So our investment sectors are really strong. Our capital equipment sectors, computer electronics, machinery, those numbers are really strong. I mean, that's obviously what you really want to look at, is what's happening in that area. And I think that the biggest issue here is really we have really long lead times. We have record capital equipment lead times, and raw material lead times have never been this long. And we're sitting here at the highest price point that we've probably seen in the last 35 years. That's causing buyers to pause and wait. I think they have orders laid out much longer than they normally do, and they're probably at much higher prices than they would really like to pay. So I think in some respects, that's why you saw the new order number come down a little bit, because they've got orders probably out all the way to 2023 at prices that they really don't want to pay. But I think the month kind of indicated that we're starting to see some kind of price easing. 4% of the comments were lower prices compared to 1% in March. I think that's positive. It'll move in the right direction. On the supplier delivery number, I think we're going to continue to move closer to a 62, 60 kind of level. And the big concern here is production and just getting enough people on the factory floor to really convert that product. Because as you saw in the first quarter, durable and non-durable goods are still very positive, as we've been indicating in the PMI number.
Any detail you can provide on that net export number? I mean, I think that most investors have a sort of gut check reaction when they see the net export number deteriorate. They think, ooh, dollar. It's all about this dollar strength. Is there any evidence in the comments that this is currency related, or is it just a slowdown and a lot of friction still in supply chain?
Well, I think in Q4 of last year, we had a lot of difficulty getting containers into the U.S. ports. We struggled with that all the way to the Lunar New Year in the February timeframe. In February and March, we kind of freed that up. So we had a lot more imports coming. I think it's more of an import story. And it's really timing between Q4 and Q1. So we had a really high GDP in Q4, but we weren't able to unlock that import number. So I think a bit of that caught up to us in Q1. But I'm really concerned, though, about the future here, because you've seen the amount of liners piled up outside of Shanghai and Ningbo and the major ports in China. They've had the ports shut for about a month. There's difficulty in transporting product to the ports inside of China. And all that's going to lead to is a big tidal wave of container ships sailing to the U.S. And we're going to be back in the September, October timeframe of last year when you're going to have 100 ships waiting to be unloaded. That's going to put strain on the road freight situation in the U.S. You're going to see spot rates go back up. And then, on top of that, we have a labor union negotiation going on the West Coast in July. And then when that's over, you got the season rush. So, I think the only seasonality that we really had in COVID is the holiday season. Everything else has been dealing with long lead times.
Tim, just to kind of start to wrap this conversation up, the market's initial knee-jerk reaction was that this was a negative number. I've listened to you, and I'm hearing that this is an economy that is still humming along. It's got shortages. Those are the bottlenecks that are providing problems right now. How would you characterize, just in a few words, what these numbers should tell us about where we are with the U.S. economy?
I think we're still really strong. Your last guest really commented about no sign of recession, inside of next year sometime. We're 23 months into what typically is a 34 to 35 month manufacturing expansion cycle. And we think we've had a governor put on because of the supply constraints, which means this is probably a 40 to 42 month expansion cycle. So we're really not seeing any indication of weakening demand here at all today, and not expecting anything really until the end of next year. I think it's a 2024 discussion, if that. So, we had 3-to-1 positive demand comments, not so positive. The number of comments is really hard to figure out these days because I have a lot more people talking about price increases and late deliveries in the general comments, but no indication at all that there's any easing of demand. Like I said, the backlog number, 85% are the same or better than it was in the prior month. Customer inventories are still well below 40. And you can explain the new export number because of what's going on in Europe and Asia. So I think we're in for a strong run. We're continuing to be in for a strong run.